Tesla stock is currently down about 2% at the time of recording this video, alongside broader markets that are also selling off, following what was supposed to be a pretty slow day today, which turned into a crazy day. Let's start with some Tesla stock breaking news. JP Morgan analyst Ryan Brinkman has raised his Tesla price target to $130 from $115 per share while maintaining an underweight rating. But what's probably the most interesting news of the day today, it's being told that Tesla will be issuing a free over-the-air software update for the Cybertruck because of a rear-view camera issue that might delay the image being displayed on the dashboard. But the most interesting part of this is the NHTSA doc shows that Tesla likely built 27,185 Cybertrucks as of September 14th. You also see here the estimated percentage with the defect only sitting at about 1%, so this was not a widespread issue. And apparently the issue has already been fixed. Edmunds added a Model 3 Performance to their long-term test fleet. They say, quote, "If your goal is to go as fast as possible while spending as little as possible, the Model 3 Performance is a solid buy. Its day-to-day livability is excellent with good range and a lovely interior." Toyota is delaying the production start for its first US-made electric vehicle until 2026. And it's also being reported today the US government has issued $2 billion in point-of-sale consumer EV tax credit payments since January 1st, 2024, covering more than 300,000 vehicles, with 250,000 of those vehicles being tax credits issued for new EVs and 50,000 for used EVs. Gene Munster just said this about Tesla. Quote, "I have a different view and see the results as a win for the company given they mark a return to growth for the first time in 9 months, despite multiple headwinds. As for next year's deliveries, the timing of a new model will have a measurable impact. Beyond 2025, growth should ramp to above 20%. And this is in regards to Tesla deliveries, which really Tesla stands out right now as a car company that is actually growing on a year-over-year basis. Both GM and Stellantis seen declining deliveries on a year-over-year basis. Now, the biggest thing moving Tesla's stock today really has nothing to do with Tesla at all. Sure, is there that hangover effect from yesterday's sell-off? Of course, I'm sure there is. Really, the last 2 days have been red for Tesla, and that's having an impact. But the big news of the day today that sent markets lower was actually this. Biden says we are discussing Israel striking Iran's oil facilities. There was this article posted on CNBC earlier today. It says oil markets faces a rude awakening if Iran's energy infrastructure is targeted. Analysts say, and this was posted at 7 o'clock in the morning. It says oil markets are being too complacent given the risk of major supply disruptions in the Middle East, an analyst told CNBC on Thursday. Bajard Schildrop, chief commodities analyst at Swedish bank SEB, said that if Iran's oil infrastructure is wiped out, prices could easily go to $200 plus a barrel. Just to put that into a little bit of context, we've never seen $200 a barrel. In the height of the 2008 oil spike, prices only ever got to about $140 a barrel, and that was briefly. Even back in 2022, we only ever got to about $120 per barrel. Like, if $200 or more per barrel was achieved, that would be a full-blown crisis for the U.S. economy. At a time when the U.S. economy really isn't strong at all, it's weakening. And this is something the markets are starting to pay a little bit more attention to because oil has a broader impact. A lot of geopolitical conflicts, this country fighting that country, have very little impacts to things, right? We don't do a ton of business with Israel. We really don't do any business with Iran. Like, from that standpoint, a geopolitical conflict would not be important, but oil markets would be affected dramatically, and that touches every business in the U.S., right? Transporting, like if you have anything just around you, look around. If you did not build it, this computer, that camera, this mic, that computer screen, that keyboard, those books, I didn't build none of that. It was all shipped from somewhere to somewhere that I went to the store that, and bought these things, right? So that is very important. Not only would theoretically $200 barrels of oil affect companies and producers, it would also affect you and your daily mobility efforts. It would be a big hit to your bank account, essentially. And oil spikes tend to precede recessions. You tend to get a spike in oil, and then you get a recession. Basically every recession we've gotten over the past 20 or 30 years. That's because when the economy is weak, the last thing you need is a spike in oil, gas prices to go up, and companies to get squeezed even more. In other news today, first things first, we had Challenger job cuts, which came in at almost 73,000, which is pretty abnormal in this time of the year as you're heading into the holiday shopping season. Normally, this is not when companies plan layoffs, right? Normally, this time of the year tends to be when Challenger job cuts are hitting their lowest points. And then to start a new year, that's where things rise as companies send out warn notices and plan layoffs. So this was a bad number today. Initial jobless claims came in at 225,000, up from 219,000 last week. The estimate was 220,000. So for Wall Street, that's paying ultra close attention to initial jobless claims. After a couple of weeks of declines, you're rising again as far as last week. And if that does start another rise in initial jobless claims, Wall Street's going to get more concerned. We did get ISM Services PMI that, interestingly enough, beat on the top line, coming in at 54.9. The estimate was 51.7. So that looks good. But if you actually take a look at the employment component here, it kind of plummeted from 50.2 last month down to 48.1. You are now under 50. That means employment is actually in contraction for the service sector. So not only manufacturing is in a contraction, now services are in a contraction for employment. That's not great. Now at the same time, which is just weird, services business activity came in at 59.9, much better than the estimate of 53. New orders came in at 59.4, much better than the estimate of 52. So what's going on? That doesn't make a whole lot of sense. Why is employment falling, plummeting, and new orders and business activity is actually rising? Very strange. Prices in the services sector also came in at 59.4. The estimate was 56.3. So prices going up more than expected. A bit of a mixed report. Upon the release of the ISM Services PMI this morning, markets actually went higher initially, and then you got those comments about Israel striking Iran's oil facilities, oil shot up, and the S&P fell. So that was really the biggest catalyst that impacted Tesla stock today. Goldman Sachs is out today saying that you should buy small caps, that you should just average in dollar cost average from now until election day on November 5th, and then we should get that seasonal rally. But really from now until November 5th tends to be a very weak period seasonally for markets, typically tending to bottom out the last week of October. Now, Tesla's Robotaxi event is upcoming on October 10th, so literally next week. I think it's really going to depend what that jobs report says tomorrow and where markets go from here. Also, the implications for oil. If Israel does strike Iran's oil capabilities, then that's obviously going to be a bigger problem for markets. And again, that is something that has a large effect on economic activity. And that's why you tend to see a weak economy that experiences an oil spike, and next thing you know, you're in a recession. At least that's historically what has happened over the past few recessions. It's just that big domino that falls that just exacerbates all of the other issues that are already going on in the economy. Like, I vividly remember in 2008 when gas prices were over $5 a gallon here in Michigan, which on, in inflation adjusted terms would be like $8 today, something along those lines, maybe more than that. And, my mom wouldn't want to drive down the street. We didn't do much because gas was that expensive. She was also unemployed at the time, so maybe that also had something to do with it. Now, here on the day today, as you would expect, there is more shorting activity in Tesla stock. You are looking at, on net, about 240,000 shares that are being sold short today. You do have short interest of free float at 2.76%. $19.1 billion currently sold short in Tesla stock, totaling 76.68 million shares that are in total sold short. What's also very fascinating here is Tesla's option activity from big money today continues to be very bullish. You have seen 52 different trades totaling $20.35 million with a positive order value of 85%. Sentiment for Tesla stock today is, as you would expect, going lower, coming in at 38 today, which is bearish. Yesterday, you were at 35, so actually increasing a little bit, but still just very bearish overall. Message volume decreasing from yesterday. It was extremely high at 75. Now it is high at 61, and the participation ratio today is high at 55. I should mention there was some favorable news overnight for Nvidia that is causing Nvidia to rally about 3%. When you actually look at the internals of our markets, it doesn't look like a great day for markets. It's really just big tech holding things up, but really specifically Nvidia, AMD, the chip sector at large. 80% of stocks currently trading above their 50-day moving averages back down to 55.21%. This has went from a high of 67% as of September 27th, now down to 55%, and it's actually coming in at 53%. I don't know why this is not updating. So you're actually seeing about 4%, almost 5% of stocks breaking below their 50-day moving average today. It's not a very strong day for markets. We do see Google Trends search interest for the Tesla lineup is continuing to fall as well. Cybertruck now down to 39, the Model Y at 21, the Model 3 at 20, the Model S at 10, and the Model X at 7. CNN's Fear and Greed Index is coming in at 67 today, down 1 point from yesterday when it was at 68, although you are seeing a pretty large red day for markets. I'm surprised it's not moving down more. 2 and 10-year yield curve inversion is uninverted, 14 basis points, unchanged today. 10-year treasury yields continue their march higher basically every single day, up another 4 basis points today, up to 3.825%. And again, as I mentioned, oil is now at $72.81 a barrel, up almost 4% today, but this is still not pricing in a lot of risk for energy markets. So I do think there could be a good hedge opportunity if the Middle East situation does spiral. And to conclude this video, Tesla stock is down about 2% today. That could change by the time you guys are seeing this. Tesla stock is below $246 per share. That was the critical level we wanted to stay above. The next important level is that 20-day moving average at about $240 per share. If you don't hold above that, $235 is your next stop. But I will say the lower we do go heading into October 10th, the larger rally that I would expect after the Robotaxi event, because I think with the Robotaxi event, you should get a decent amount of hype. If you don't see that hype ahead of the event, you'll likely see that hype after the event. I don't think Tesla can just have a Robotaxi event and there not be hype associated with that really at all. I don't think the latest rally in Tesla has much to do with the Robotaxi hype either. I think it just had a lot to do with the delivery numbers that kept coming in good, the demand that was starting to pick up in China. So let me know what you think about all of this information down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. You guys have a great rest of your day, and I will see you in the next one.